I think we're at over 9 billion already, and we're not even halfway through the year. So we're seeing a lot of opportunities. Now, do you want to have a regulatory environment that is supporting these opportunities, or do we want to stifle this innovation? That's the question. So some regulators are taking the approach, a wait-and-see approach. They're not doing anything. That creates regulatory uncertainty, which isn't necessarily good for these companies, businesses, and foundations. But some jurisdictions, as Alexia mentioned in her presentation, have taken the lead. They've been very agile in being very vocal that they want to attract these businesses to their jurisdiction. And as a result, they're receiving that foreign investment. And they're also providing jobs and so forth. So what you want to do is you want to have a very agile regulatory environment that is supportive of the innovation, because if you do that, we have the ability to achieve sustainable development through innovation. It means that you can have a country of innovators. You need a few things to achieve that. You do need the internet, so you need to have a very strong ICT infrastructure. The Minister of ICT here in Uganda spoke yesterday, and he was very, very supportive of this technology. That's perfect. The next thing you need is to have the human capital. You need a skilled workforce. You need the intelligence there. You need the educational programs in place. And that's something that Uganda has as well, and something that I know will be developed. I'm happy to assist in any way that I can. I've been developing courses for the University of the West Indies. There's also funding available for these things, because this is going to help to develop your country. And the final thing that you need is the environment. So you would have heard people talking about sandbox. The first person to mention this was Professor Endemo from Kenya. And he spoke about this, that he got into too much depth about it. A sandbox sounds like something that a child might play in, right? But what it is it's a technical term for an environment that's controlled, where you can put a technology in it and observe it, maybe in a beta form. But from a regulatory perspective now, we're talking about having businesses, having the businesses behind these technologies function in a flexible regulatory environment where there's no existing legislation or legal framework that speaks to what these businesses are doing. And it gives the regulator the ability to create a set of customized rules and guidelines in the absence of any legislation that these companies can follow. And what that does is it gives a measure of monitoring by the regulator, so that they can see how these businesses are functioning. There's knowledge sharing that can take place, so that they can understand the technology more. But there's also more certainty for these businesses, and there's protection for the consumer, which is important, because as was mentioned by the Bitcoin Foundation presentation, there are a lot of scams in the space that can pop up. So we do need to be aware of this. Regulation is important in this space.
Thank you very much, Lou. Alexia, quite a bit from you, but if there's anything you want to add, and if I might throw in a question myself. Lou has raised consumer protection, Roland raised consumer protection, and Lou raised the question of, we need regulation, but would you please wait? So the other part of the question is, when is a good time to regulate?
I think that's a great question. I think it's important, again, for regulators to understand the technology before they regulate. Trying to regulate when we have no clue what it is would be a mistake. So while wait and see works, that'll really depend on every jurisdiction. At how quickly they bring in regulation will depend on how quickly do they understand what they're doing. Consumer protection is very important. And I think that what we've seen with certain jurisdictions that have focused on the ICO space, for example, Switzerland has said that ICOs registering will have to pay a certain amount to FINMA to register. The idea, again, is that perhaps some scams will not issue their ICOs, scam ICOs will not have their ICOs, because they'll actually have to make a little bit of an upfront investment. In Europe, Gibraltar, and Malta, we have, they're looking at sponsorship programs where you actually have to have a sponsor that is part of the government and essentially sits there with you during your ICO and throughout the process to guide you and to inform regulators and to ensure that, again, we're protecting the people. I think what's very important from a Ugandan perspective when it comes to regulation is, as opposed to trying to learn everything about this, we have to think about what do we have and where do we want to excel. And that is something that I have said to people who are involved and wanting to draft regulation is, which area are we going to focus on? Trying to regulate in every area makes no sense. Are we going to be the country for crypto exchanges? Are we going to be the country where ICOs will occur in Africa? Are we going to be the country for funds? Where are we going to focus? And the countries that we have seen focus have seen success. Cayman Islands has been a country of funds. They have a segregated portfolio company structure that makes a lot of sense for crypto funds. ICOs as well, Malta, Gibraltar, various Caribbean nations, bringing in legislation, like Anguilla bringing in the utility token, bringing clarity. This is what they want to focus on. Again, exchanges, similar thing. We've seen legislation in Wyoming in the United States on money transmitter laws. That is extremely important. So again, for me, it's what are we going to focus on? Where is in our legislation do we have the opportunity to really excel? A lot of companies are trying to come into Africa, and this is our opportunity to be that entry point. Perhaps Mauritius will be the entry point because of the tax treaty network that it has. But thereafter, countries go into the continent. And so this is where we have an opportunity to pick our area, develop that legislation, become the best at one thing. And then afterwards, we can develop the regulation further for all other areas, for smart contracts, for everything else.
I think the audience is saying those are excellent thoughts. And that's a lot from industry, but I'm curious to hear what the two main regulators have to say. And perhaps Keith is going to start us off.
Okay, thank you very much. I'm very pleased to be here to speak to you. There's a US president called Ronald Reagan who said that if it moves, tax it. If it continues moving, regulate it. And if it stops moving, subsidize it. I'm not a big fan of Reaganomics. The US moved from being the largest creditor to the largest debtor during his 8-year rule. But I think he said some valuable points there. What do we regulate essentially as the Capital Markets Authority? We do not regulate the assets themselves. I think that was mentioned by Lou. You can't regulate an algorithm because you don't know what it is. It will take you too long to understand what you're trying to regulate. So what we really try and focus on is, who are you? Who are the promoters of this asset? How well do they understand it? How much time and effort and energy has gone into trying to develop this asset? I believe businesses are set up to succeed, not to fail. I don't think they set up these businesses to simply scam the public. The second thing we want to know is, what are you going to use this money for? What are the proceeds from any ICO or any offer to the public going to be used for? Because our primary focus is investor protection. We try and protect, especially unsuspecting members of the public, from anything they don't understand. And sometimes we try and restrict any complicated offer to only high net worth individuals or professional investors who can afford to lose a bit of money, or who have the capacity of protecting themselves. The other thing what we try and really focus on is essentially the guidelines and regulations that we develop are meant to standardize the process through which we go through to approve anything you're going to be offering to the public. And that is just to ensure that public offerer A is treated the same way as public offerer B, to make sure there's no subjectivity in the criteria we use to assess and approve your public offer. Our approval doesn't mean we endorse the merits of your offer. Our approval means we've just asked you as many questions as we can think of asking you, and that you've disclosed as much as you possibly can disclose about whatever you're going to be releasing onto the public. There's always a health warning in any approval that we insist upon, that at the end of the day, you're on your own. If something goes wrong, you've understood the risks, you've gotten the necessary advice, don't come back to us and blame us for your investment choice. That's essentially what we do when we're approving or considering anything that is going to be deployed to the public, but also conscious of the fact that, especially in the area of digital or this fintech, many times promoters want to be regulated because it gives them legitimacy. And we actually have to think about how much fees we charge for that legitimacy. I think we need to hike up the fees because it's a marketing tool indeed. Thank you.
That's an interesting question, but in light of the governor's remarks yesterday, what happen if it's in Bitcoin, for instance? That would make things interesting. But Dr. Finemanzi. There we go.
Yes. Thank you, Robert. And I would like to say thank you for giving us the opportunity, giving me the opportunity to be here. But first, I think my governor has taken a little bit of bashing. Perhaps he was misunderstood over yesterday and today. I would just like to indicate that his concerns are born of what any central banker is. Central bankers, and this is, I would say this about myself, we tend to have a bit of constipated personalities. We are very, very risk averse. So that which we do not understand, we are not necessarily askance at it, but we look at it with caution. So his views yesterday, which I think perhaps were misinterpreted as opposition or opposing the idea, are that he has his concerns about the risks that might arise out of blockchain, and so far he has not been presented with any evidence that these risks can be properly mitigated. That said, let's go to the question you asked. You know, to regulate or not to regulate, which is similar to Shakespeare's words, to be or not to be.
That is the question.
That is the question. You see, to regulate something like blockchain, it is neither, and I'm going to use the words of Eva Kaili, a member of the European Parliament, who I think chairs their panel on science, looking into artificial intelligence, blockchain, and other new technologies. You see, blockchain is neither an infant, nor is it an adult. But it's more like a promising teenager who has shown great potential and therefore raises expectations in terms of what they can be. Okay? But that teenager, to realize their potential, they need a bit of guidance. They need direction. They need, I wouldn't say necessarily regulation, but they need guidance, they need confidence boosters, and most important, they need space to be able to grow and realize the potential that you see. That, I think, as a central bank and as a regulator, we take. If that is the case, then, do we regulate or don't we regulate? The approach so far that we're looking at the Bank of Uganda is, and someone mentioned it earlier on, is have some kind of regulatory sandbox. Have those who are willing to try it out in a very controlled environment, which might possibly require relaxing some of the initial stringent rules we have around the standard products, and then get to see how it evolves. But regulation, I think, is necessary. I think the bigger question should not be whether to regulate or not to regulate. I think the more important question should be how to regulate. Thank you.
Those are excellent thoughts. And my first question to our panelists, starting with you, Dr. Finemanzi, is I want to take it from where you stopped. The regulation and the rules around the customary products as we understand them today. One of the things about technology that we as lawyers know for sure is that it runs much faster than any legal framework anywhere in the world. Do you think that given its impact on intermediaries, for instance, that blockchain will render significant parts of the prevailing regulatory framework irrelevant? Or do you think that the blockchain revolution as we see it will necessitate a regulatory revolution in terms of thought, in terms of approach?
Thank you, Robert. I think there will be a complete rethink of the way regulation is conducted, just because of the very nature of blockchain technology. You see, there might be almost a default reaction or tendency to want to put this whole new technology and try and fit it within our original old shoeboxes of regulation. And that doesn't work. It's like, putting a square peg in a round hole. But that said, yes, regulation will change, but perhaps it will change and be more accommodative or more allowing of the blockchain technology and any other applications it might have. And it's something that I think one of the other panelists spoke about, is if you look at use case-based regulation, do you have one regulator for all? Would you have a series of very many regulators who possibly at some point become so many they start stepping on each other's toes? So those are some of the questions we have to look at. So the balance then becomes, you want the benefits of the innovation that comes out of blockchain. On the other hand, there are potential risks arising out of the application of blockchain. So in that case, then the new regulatory paradigm would be focus on helping create a path or chart a way that this technology can be able to provide the benefits we all envisage, some of which we cannot begin to fathom at this time, but at the same time, along that path, ensure that perhaps there is a railing on the sides to prevent risks, external risks or endogenous risks from affecting its ability to present its benefits to society.
Talking about risk, which is a crucial question, I wanted to ask Roland, from what you're seeing in the Caribbean, is it possible to design a framework that is able to achieve regulatory means without losing the policy ends? So, because, for instance, if one is to take into account, and the legitimate questions around risk, and you can never educate all the masses, but one must protect them from a consumer protection perspective that I think you mentioned. In fact, is it possible to achieve the policy means?
Yeah, I think an interesting way to accomplish this is to look at these businesses and risk profile them. So you would have, for example, one of the regulators here spoke about how much do we charge for people to enter into a sandbox. So all of a sudden now, you have the ability to charge an application fee. That's going to get rid of a lot of the scams. But then you want to charge an annual licensing fee. So now you're starting to generate some revenue. But that licensing fee can be a graduated licensing fee depending on the risk profile of the business. So if you are dealing with a business, for example, we've seen like the civic identity solution that Lou mentioned, that's just helping people to solve an identity problem using blockchain technology. So the risk profile of something like that would be very low compared to, say, something that would be used for payments. Now, all of a sudden now, yes, you have people who may want to use this for money laundering, etc. So you may decide to have a higher risk profile for that. That may require a little more monitoring. So you would charge a slightly higher fee for the annual licensing. If we look around the globe today, we can see a number of regulatory sandboxes that are operational. For example, Mauritius has a regulatory sandbox. The UK has one. They've had it for a couple years now. Singapore, Hong Kong. different jurisdictions have different regulators housing these sandboxes. In the UK, it's the Financial Conduct Authority that regulates the sandbox, but they are very heavily supported by the Bank of England, the central bank. In Singapore, it's the Monetary Authority of Singapore. In Mauritius, it's Invest Mauritius, which is quite unusual. I didn't know that Invest Mauritius was a regulator, but that's to attract business to Mauritius. So what we're seeing is very different models globally, but these sandboxes globally are interoperable. There's bilateral cooperation agreements between sandboxes. So for example, the UK has an agreement with Singapore, and UK businesses can go to and operate in Singapore. Singapore businesses can operate in the UK. So potentially, you set a sandbox up here in Uganda, you can have businesses from the UK come here, and Ugandan businesses can go to the UK, and you have that the bilateral agreements that you can form with jurisdictions all over the world through the sandbox, through the regulatory environment. This is international business 2.0. We're seeing a unique way of doing business now through these flexible regulatory environments that are not just temporary things, but they will be here for years to come. We don't know what the technology will be in the future. We don't know what risks will be associated with it, but we do know that we'll have a regulatory environment that will support anything that potentially will come up in the future.
Starting with the point about that support what will come up in the future, I wanted to ask Keith, how do you think regulators should respond? Because it is clear that regulators should pay attention, but what would you say is a good way to respond, especially around questions like product development? Do we get 10 regulators in a room and say, you should think about it? Do we involve industry? What would be the best way to go?
Robert, I think we need to know as much as possible about what's being done, but we can never be ahead of the curve, obviously, because developers spend more, that's their business, that's their bread and butter. We need to encourage as much development as possible on the idea of sandboxing, which is like, our understanding of sandboxing is it's like a pilot. You're experimenting with this new product, new idea within a confined space, just to sort of undertake some dry runs before you can deploy it on the mass market, if you like. So we need to really encourage as much as experimentation as much as possible. We have to also recognize that markets have existed long before regulators. So let the market first try out what they want to try out before we come in with a framework that could constrain the development of the market or the product. Obviously, we want to encourage as much activity as possible, and we want to, as I said earlier, we want to believe that whoever is developing these new ideas has good intentions. So we need to facilitate that as much as possible.
Gloria, there seems to me to be an interesting situation. The regulators don't want to take the risk. They want to encourage you to take all the risk and possibly blame you when things go wrong as industry. Do you see a way in which industry can play a role in working together with regulators to ensure that the architecture is not inimical to stimulating progress and development? And how does that come together?
Thank you. Thank you, Robert. Sorry, I'm having
there we go.
A bit of a battle with my microphone. Thank you, Robert. I think that probably the best starting point in that conversation is to say that a regulator cannot regulate what they do not know. And how do they get knowledge about that? It is about the industry players participating in that conversation. It is about the industry players being able to come up and give their opinion on the space. And you look at, like in the UK, the Financial Conduct Authority went out to its industry and said, what are your thoughts around blockchain and how do we go about regulating this space? bringing it back home to Uganda, there are very many situations that the Capital Markets Authority, for example, reaches out to the public. So it is that starting point of saying the industry players must lend their expertise so that as regulators kind of wrap their minds around what it is they're trying to regulate, they're coming from an informed position. It is about being part of that conversation. But also I think that another interesting aspect that can be considered is to say that even as we consider regulation and as we consider which direction it should take, the reality is that because of the type of technology that we're dealing with and because of the myriad of use cases that can arise, we are not going to have a regulation today or tomorrow or the month after, but we're going to be using this technology. So can the industry players kind of find a way to create some standardization as amongst themselves? Can you find a way to say that we will agree on some standardization around, for example, the metadata, so that our systems can speak to each other and understand each other because we're meeting a certain pre-agreed standardization. So I think there is potential even in the players as we wait for regulation in helping to create what will be the baseline architecture to take over.
And you know, coming from that perspective, I think there's fairly enough consensus that you can't regulate this with the industry players out of the room, which I think used to be the approach many times that central banks, for instance, would write regulation depending on how they see risk, and then everyone has to fall in line. The question, though, as we've seen in the blockchain space, is that people are talking about self-regulation, and now we are talking about regulators in the mainstream sense of it. So I wanted to ask Alexia, self-regulation, regulators being involved, we all agree that regulators should be involved. Do you think they should limit their role? Or do you think they should involve directly in the functionality of the technology? Because there's two aspects about it. There's learning how algorithms actually work, and how you develop the products and how an ICO differs from this other product and so on and so forth. So do they regulate the product? Do they limit their role? Do they go all in? At what levels do you see this playing? Or versus the whole notion of self-regulation in the blockchain space?
I think that regulators need to be a part of the conversation. I think that self-regulation has really come about because regulators have not taken their place. And essentially, we've seen that a lot, self-regulation in exchanges. I mean, all over the world, exchanges are setting up, groups where they're essentially regulating. And again, the industry maintains certain standards so that there isn't this, negative media attention that we're constantly because we haven't had the regulation do be there. I think what's important as well for regulators, and regulators globally, but regulators here, reach out to regulators that have already dealt with these issues. Because it's important, and civil society is important, but they've already gone through a lot of these issues. And what you'll see is that, or what I've noticed, is that regulators are very happy to help others in moving towards kind of the journey that they've already been through. And because everybody is going in so many different ways, everybody is learning different aspects where a lot of these lessons learned shared. And today, if Uganda made kind of a campaign where they reached out and said, come and assist us, you will have an outpour of organizations, of regulators that will be here to provide their lessons learned. In fact, in Canada, the organization that has really helped develop our sandbox, the first organization in the sandbox in Ontario called Token Funder, it's been an difficult journey for them because they were the first company at sandbox. Regulators everything through, which means that in some ways their business has not moved as quickly as another business that had simply structured in another country, because they had to teach the regulators every aspect. Today, position those decisions. And while, of course, coming back to what you said, self-regulation is important as a first step, we do need to ensure that our regulators that have experience, that understand, to craft it such that blockchain companies can continue to build and that it makes sense for each jurisdiction.
That's an excellent point. I wanted to turn this around a bit and come back to product-based impact. And I wanted to ask Dr. Twinemanzi, I think one of the main reasons why blockchain has attracted this much attention is the impact on finance. Do you see, in your view and from your lens as a regulator looking across a market like Uganda, that blockchain innovations are likely to impact directly and to what extent products peer lending? And therefore, how would regulators respond to that? Should they say, where's the likely impact going to be the hardest? Or is that being too predictive and requiring an algorithm, for instance, of a regulator?
Yeah. The impact of blockchain on peer-to-peer lending or single crowdfunding. First of all, in Uganda, we have, I don't know, unfortunately or fortunately, not been, have had to deal with this as a central bank. Mm-hmm. So, in that sense, perhaps we're unfortunate. But blockchain, by enabling peer-to-peer lending or peer-to-peer funding, for us as a central bank, that's where one of the things of risks come in, especially AML and CFT considerations. As much as possible, any central bank, and not just Uganda, would like to be able to know who is exchanging funds with who. Funds, and when I say funds, I'm using this generically. This can include tokens of value or other means of value. Now, if we don't have the opportunity to understand or even appreciate the risks involved, there's a tendency to, for lack of a better word, oppose. Now, being in opposition for new technology is not necessarily a bad thing, because when you look over the history of most new developments and technologies, more often than not, it is the opposition to the technology initially that has helped it become better and eventually enable this adoption. Because that concern of risk, if it's presented by most of the central banks, the developers of this technology and those working with this technology are then put in a position where they find ways to address it. And I kind of want to agree with the other panelists. That can only happen when the central bank and the developers of the applications out of blockchain sit together. Okay? Of course, yes, granted, the whole issue that the majority of the applications arising out of blockchain tend to be geared towards finance and banking. Some of the hullabaloo is, of course, the bread and butter for central banks is the traditional banks, the incumbents, the old business models. But if you're going to have disruptive change, I think for us our focus would be, can we have it in not necessarily continuous, but even if it's in discrete jumps, small, discrete, and manageable discrete jumps. I think that's what will be our focus here.
That's an excellent look at it. But I want to think about this from, and maybe Keith will help us here, from the perspective of raising capital. How do you go about it? Because while let's take different regulation out of banking and finance, for instance. Communications will say, let's regulate product-based, let's take the product-based approach and focus on regulating, licensing people along certain milestones. The central bank will say, let's take, for instance, minimum core capital as an indicator of your stability. And if we realize that your core capital is tripping, we're going to come and say, there's a problem. And can we step in? In fact, the way our framework is written, By the time they step in, it's presumed they've been watching you for a while. In the context of raising capital, where the question is, how fast can I raise 10, 100 million? And now I have access to a pool of finances across the globe, as opposed to those players who will be regulated on coming in. What is the best way to go about when to step in, when to stay out? Assuming we had all the robust KYC, is there room for how a regulator would work with industry to not necessarily minimize impact, but at the same time not ignore risks? How do you see this come together?
Okay, thank you. It's not just about speed, it's about safety. To agree on the criteria the industry has to comply with in the process of raising capital. As much disclosure as possible, as much transparency as possible. Unfortunately, blockchain is about, this whole idea of fintech. You can easily, I think due diligence through the internet could even be a lot more effective, because if, let us say, you agreed on a time frame within which all manner of comments should be, all manner of questions should be addressed, that could be the best way of actually undertaking a due diligence on a new product that is strange or that is not easy to understand. And that could be one of the real benefits of undertaking due diligence on the internet. It's also about the use of proceeds. As I said earlier, what are you going to use the money for? Where are you going to keep this money? Who's going to be in charge of making the decision to utilize these funds? Can it be diverted? Will it be used for the intended purpose? What happens if you don't comply with any of these conditions? How swiftly shall we take action against you? And the public needs to be confident that we have the capacity and the ability to move swiftly against anyone who sort of defies any of those conditions. Otherwise, this is where now regulation becomes useful for the success of your own public offering. Because if the public is confident that they'll be protected in some way, then they're more likely to participate than if they're not sure how effective you're going to be in terms of protecting them. Yeah.
That's an excellent. So the sense I'm getting from the panel across and going back and forth is that I think we all generally agree regulators are not the boogeyman. They are not the people to avoid. But I want to sort of step out of this, and if I might ask you, Gloria, to dream a bit. How do you see all the applications on blockchain, and whether in finance or out of finance, from an industry perspective, how do you see them going mainstream? Because I think it might help us to see what would it take for these applications to go mainstream, and then come back to say, how do we keep ourselves safe from there to here, from here to there? And then I'm going to ask Alexia, following on that question, to talk to us about dispute resolution. And how do you spot it? How do you manage it? But if you might.
Well, when a person tells you, go ahead and dream, it's quite open. And I think Keith mentioned something that would probably form the beginning point of how these use cases can go mainstream. When he said that when people go to a regulator, there's a certain veneer of credibility that is automatically attached to them. So one of the ways that blockchain and its different uses could go mainstream is obviously that conversation and association with the regulators, because then a person feels that if I participate in an ICO, I can take comfort from the fact that probably the Capital Markets Authority did some background check on the people that I am dealing with. And another sphere is, I personally work for a bank, and when you're in a bank, people love to hate you. People wake up in the morning and say everything nasty about their banker, and they'll still come tomorrow. Why? Because before blockchain, your bank was as close to trust as you could get. Your banker is the one that gave you that trust and confidence. And now you have blockchain, but it's still fairly in its infancy, or it's an early teenager. So if the person that you currently trust was to adopt this technology that is promising you even more trust, then we're starting on the journey to mainstream. If your banker was to be able to provide certain products and services that utilize this blockchain technology, then you're beginning to go mainstream, because then you are kind of elevating the trust that blockchain is promising you, but starting from a point of the person that you trust today. And I think that as people get more and more educated, like you correctly stated, we cannot educate everybody. And depending on how much access to information, you then determine what's mainstream and what isn't. But as people get more and more educated, and as the journey on adoption continues, and you probably get to that point where you say that blockchain isn't just for the person that's sitting in Kampala with their smartphone, but that there can be some uptake for a person that's up-country with their USSD option, and that they too can participate, you're getting mainstream. You're getting it out to reach everybody, to be accepted by everybody, or at least a majority, and to benefit everybody.
Kendra, how do we go about disputes in this area? I raised money, I closed shop and ran away. They have finally found me. We have to go into that one pack an algorithm to decide that, in fact, the money I did not take. It sounds all too complex. And I know that we can talk about smart contracts and the fact that they in themselves present an opportunity to even anticipate and avoid disputes. But what do you think the mind of regulators should be? Where do you think the mind should be in terms of disputes and these risks? Because I think on the other side of risk is a dispute of some kind. Where does this fit in the discussion on participation and collaboration between industry and regulation?
So before I answer your question on disputes, I do, since we have a banker here, I want to mention something that I think is really important for everyone to know, is that banking and bankers really need to start understanding what's happening in this space, because there's a global problem with banking right now. A lot of blockchain companies, even those who are not dealing with cryptocurrencies at all, have had their bank accounts shut down globally. In Uganda, if we want to draw blockchain companies, we do need to deal with this issue. And if companies are holding any types of amounts of money, if they've had an ICO, we're talking $30 million, $100 million in crypto wallets. We want to have bank accounts, but the issue is that they're not able to have them. And so they're walking around with all kinds of millions of dollars on their mobile phones, or using various other forms of cold storage. And this is an issue that bankers are really, really integral to kind of the future of both crypto and just blockchain in general. When it comes to dispute resolution today, we're seeing the problems. And Tezos is an example of that. A company that started a foundation in Switzerland, a foundation being a non-profit, and that is a structure that many companies use for initial coin offerings, where essentially you have the profits go into the foundation, often structuring in Switzerland, Singapore, Cayman Islands, and those foundations are not subject to taxation. So where you have an ICO that raises, $30 million, $100 million, those proceeds will not be subject to taxation. However, the foundation usually has very strict public use. And more importantly, in Switzerland, in the Tezos example, you have to have independent directors. That is usually the case for all foundations. What happened with Tezos is, after a raise of over $200 million, there was a disagreement between those who had the ICO and the director of the foundation, who is a separate third party. And essentially now you have, of course, lawsuits as the money has disappeared, and you have lawsuits between people who actually contributed in the ICO, as well as between the foundation and the directors. So it's extremely important to see that these issues that we're facing today, they're not resolved. We've had also very interesting forms of actually using blockchain for dispute resolution. Today, an organization called Kleros, based in Argentina, today actually structured in France, is creating a blockchain-based dispute resolution mechanism using game theory, cryptography. It's really quite an interesting project. Essentially, their reason for creating that was looking at the corruption in their court system and saying, how do we create our own system that's actually using blockchain to solve our own disputes? very early on in the process. I believe they just had their interactive coin offering, something very different to an initial coin offering, but something that also brings light to how perhaps we can solve disputes in the future that is different to the way that we are solving disputes today. Very interestingly for me, as I review agreements like Simple Agreement for Future Tokens, which are agreements that many blockchain companies use in their ICOs, I noticed that there is always the clause where they turn to the courts of arbitration or Hong Kong or Singapore, and the issue is, well, do these courts actually have the capacity when those disputes arise to actually determine fairly what should occur? Because the reality is, presumably, knowing a lot of arbitrators, is that they will have as understanding of the technology, of what's happened, as many of us do. And so I think, again, just to answer your question, we're in the process of learning, and I don't think we're in a space where we can accurately, clearly solve disputes, but hopefully in time as we learn, and it's a learning process, we'll be able to one day deal with these issues.
Well, I'm having such a... I've just noticed that the clock has run away. So I think we have room for only one more question, which I'm going to ask all our panelists to give us their parting thoughts on. What seems to stand out to me is that we obviously all want to maximize blockchain technology as much as possible, but there has to be some form of regulation in one way or another. And it is clear to me that it is going to involve industry as well as regulators. What I'd like to ask our panelists, starting with Dr. Twinemanzi, and perhaps just going down in a minute, is to tell us, in summary, how do we ensure that the blockchain is unleashed without being fully unchained?
The question you ask is like the trick question. Do you still beat your spouse? Whatever answer you give, your goose is cooked. But I think, one, as was suggested, industry and the regulators need to sit around the table and first of all profess complete ignorance and look at it starting from with a blank slate. Okay? And as indicated earlier on, and I'll keep on saying, is that for regulators, the biggest concern is risk. Now, she just spoke about some of the risks or that I would see with how the disputes are resolved. Those are things that have to be addressed a priori for the regulators to have comfort. Now, of course, there's the other option of saying self-regulation, but self-regulation assumes that the interests of the developers of the applications are aligned with the interests of the regulators, because the regulators are supposed to sit in for the third party who is never a part of these discussions, the final consumer. So, I think in final analysis, really, have the regulators, the stakeholders sit down, assume complete ignorance and look at it from first principles, to borrow from mathematics. Then, agree on how you set up and establish regulatory sandboxes. Perhaps and I know for Uganda at least, we have so far created something called the Financial Sector Regulators Committee that perhaps should look at any applications that have something to do with either finance, capital markets, or banking, have a regulatory sandbox that whoever wants to develop an application over blockchain in that particular space then has an opportunity to have some kind of tryout. Maybe perhaps there are one or two banks they would like to work with who are willing to pilot on this. If it's necessary, as regulators, we might have to relax some of our existing regulations, if only just to learn. And on the basis of that, once the product goes mainstream, then we work backwards and try and put in place the necessary regulations.
Excellent. Keith, how do we unleash without entirely unchaining the blockchain?
Thank you. I think all developers or potential developers out there should take comfort in the fact that we've got a dual mandate of both market supervision maintaining confidence so the financial system continues to deliver value for the public. But we also have a development mandate. We don't come up with regulations or guidelines in isolation. We shall continue to consult. I think this is a great forum for us to continue to learn, and I think I see some of my staff in the back. That's why we're here, to learn as much as possible. We've been engaging with the Blockchain Association before this conference. We shall continue to engage with them. We need to learn as much as possible so that when you come up with a framework, it's not one that pulls up the handbrake and slows the movement of the vehicle. At the end of the day, even if you enter a bank as a business to borrow money, they look at the documents you have, but they want to listen to the entrepreneur and see whether they have what it takes, they've got the integrity and they've got the energy and the capacity to make this thing work and make it succeed. Likewise, even if you have an application for an ICO or anything else that requires regulatory approval, I don't think the other purposes of blockchain require regulatory approval, like the storage and tracking, the logistics. All those other values don't really require approval. But if they do, we're happy to continue engaging with you as much as possible and come up with a framework that works for the industry and the country as a whole. Thank you.
Excellent. Alexia?
So I would say what I said in my presentation earlier this morning. 3 things. We create a legal framework, we garner excitement and support among our civil society, and we educate and learn with our regulators. And finally, I think important is that we engage our youth. Passion and the history. And I have seen across the world drive the innovation that is necessary for blockchain. Go home to your children, speak to them about what you've learned, get them excited, because that's also important to encourage our future, because they'll be living with blockchain. And we really need to set the framework so that they can essentially live in a place where blockchain makes sense, where they're and where it continues. And I think what it really comes down to is let's do this together.
Roland?
Yeah, I agree with pretty much everything that's been said. I think that we need to align the objectives of the regulators with the overall development objectives of the country, because you don't want to stifle the innovation. There will be, the blockchain is a platform for innovators, and there's going to be all kinds of businesses and applications and use cases that we haven't even dreamed of. Things that will benefit the country, things that will promote financial inclusion. For example, there's already a solution for farmers in rural areas who do have access to the internet and so forth to digitally tokenize their livestock, which will give them the ability to put that on the blockchain. Then they can receive microfinancing and insurance for this livestock. This is something that we weren't able to do before blockchain technology. So now you're bringing a group of people who ordinarily would have had all of this livestock and not able to access funding, through this livestock. They can now do that, and that's called Sentinel Chain. So we want to ensure that all of these types of use cases that are popping up, applications that can benefit the well-being of people in Uganda and in Africa in general, it's Africans who will develop Africa. So we need to ensure that the regulator is aligned with that development, and then we can sustain sustainable development for the future, which I think is the goal.
I think that 2 things come to my mind. And the first one is that we should probably not be looking to have a prescriptive type of regulatory environment, that what we should be looking at is to have these guardrails that will allow for the different uses of blockchain to flourish while providing some degree of protection to the different users. But also to just say that we should not try to regulate innovation. There are so many scenarios that we cannot even dream up today that will come up as uses of blockchain. So we should not try to put a leash or to regulate what the innovations that will arise. Let us just provide an environment that allows the use of blockchain in a way that benefits the public and the users, and that protects them as well.
Wow, I don't think we could have had a better panel or a better way to end this. I want to start from where Lou from the Bitcoin Foundation stopped, and just say that listening to all these discussions from Lou all through the panel, the key message that I take away from this individually is that obviously there is enormous potential here, and blockchain applications will remain meaningful in very structural ways, and there are serious implications for this in terms of financial services and everything else. And industry is saying, we want to be regulated. Regulators are saying, we are willing to listen. Two things stand. One is that the traditional concerns of the regulators, whether it be stability and continuity in financial services, or systemic risk and how to deal with that, or in the capital markets, identity and trust and confidence that you will use the funds the way that you should, those will remain. So it seems to me that we finally are in a situation where we should not expect to be unchained from regulation, but we have the unique opportunity where industry can influence the ultimate outcome, whether in shape, architecture, or design, of what regulations will be. And that's why I liked to and I thought we would end with perhaps the conclusion.
If I may, from your summary, I think regulators and the developers are looking at the same coin from two different sides.
Yeah.
Now the only issue is who should go to whose side.
Do you want to suggest an answer?
I plead the fifth.
That's an excellent way. Ladies and gentlemen, please join me in giving a very robust Ugandan thanks to our panel. Thank you very, very much. I think it was a good thing that we had both industry and regulation, and I am personally deeply, deeply enriched. And again, I want to just say thank you very much to Lou from the Bitcoin Foundation for an excellent presentation. I have to say that many people, when they hear Bitcoin, think anonymity and all of that. To hear the executive director of the foundation saying, but we've been saying, we are not hiding anything. We don't want to facilitate evil. We are not the bad guys. But we are saying that you need to understand this very well. And I think this has confirmed to us that regulators are saying we're open for business, let's have a chat. And I think that's fantastic. I just want to say that for those Ugandan entities here that are interested in joining the association, the Blockchain Association of Uganda, please reach out to Kwame, to Noah, to Michael, Kipia, from Kipia Group, Sule, who spoke earlier. We have a booth down. Please, please put down your details. Let's work together as an industry, because if we don't, then they'll keep imagining everyone interested is on the wrong side of this. And I think we have a real unique opportunity here to be able to get it right. And again, thanks to everyone. And I'll leave it at that. Thank you very much to my panelists. Let's just give them one more round of applause.
Thank you, Robert, and thank you, the panelists. We're going to have a short break for tea and coffee, which is going to be upstairs. But as we leave, I just want you to remember, we have over 7 delegates representing 23 countries. When Alexia talked about the amount of money that is held up not just in phones, but in what you're carrying, it reminds me of the Galacticos. How many of you are soccer fans? How many of you are NBA fans? So imagine the dream team, or the Galacticos. And in a couple of days, we have the World Cup. So that does not beat what we have in this room. So when we come back, we're going to have another interesting session, which I'd like to request that we keep time for. It's 11 o'clock now. We're going to break for 30 minutes, be back at 11:30 to have the next discussion. Thank you very much.